Welcome to our May edition of the Philadelphia Committee on City Policy Lunch Series. Hopefully, we'll return in person. We want to break bread together next season. It is a great pleasure for me to introduce our speaker for the day, Councilmember Derek Green. I first met Councilmember Green when he was working for Councilwoman Marian Tasco. That was a couple of years ago. And then we served together on the board of directors of the Center in the Park in Germantown here in Northwest Philadelphia. Uh, Councilmember Green was first elected in 2015 as an at-large member of City Council. He chairs the Finance and Disabilities Committee for City Council and is vice chair of the Aging and Law and Government Committee. He continues to serve on many boards around the city and some of the nonprofits, but he has been very active recently in the National Black Caucus of Local Elected Officials and in the National League of Cities Executive Committee as well. He's a graduate of Temple Law School, and he attended University of Virginia. So please join me in welcoming Councilmember Derek Green, who's going to speak about a really, really important legislation that he championed in City Council. It became law, the public bank. And then he's going to answer the question, why do we need a public bank? And other questions that come with that. So, Councilmember Green, the floor is yours.
Thank you, Pedro, and thank you. I see so many friends and people I know from not only the Northwest and Atlanta area, from around the city. Definitely appreciate the opportunity to speak. I know we've been trying to schedule this for some time, and the challenge that I wear a lot of hats. That's probably why I don't have hair anymore. I think, Pedro, when we first met, I actually had some hair. Yours became a little more silver. Mine just disappeared. One of those hats that I wear, as you stated earlier, I'm the chair of the Finance Committee. I'm also the chair of the Philadelphia Gas Commission. And one of the important conversations that we've been having at PGW is the diversification of PGW, looking how we transition from fossil fuels. So we had actually scheduled a hearing this morning on a diversification study. We had a previous hearing. We had a part 2 to that hearing that started at 9 a.m. We've had a lot of speakers, and we're actually concluding the hearing as we speak. So there may be a moment where I may have to transition to wrap up that hearing, and I have some other council members who are helping me to juggle these two important jobs that we need to talk about. But in reference to the whole idea of public banking, this was an initiative that was brought to my attention back in 2016 after I first came into City Council. There's been a coalition in the city of Philadelphia that have been working on this whole idea of public banking. For me, this was an interesting conversation because I started my career as a small business lender. Some of you may remember Meridian Bank. It was professionals with a personal touch. Meridian was a merger of 3 banks, Central Penn based here in Philadelphia, First National Bank of Allentown, and American Bank. And those 3 banks came together to start Meridian Bank. Meridian Bank was a really interesting bank. It was a great small business lending bank, and I really learned a lot about lending and also the history of issues like redlining by seeing that up close and personal in various parts of the city. And it gave me some background that helped me get a better understanding why I thought and still think there's a need for a public bank here in the city of Philadelphia. Fast forward from my time in Meridian, as Pedro said, I worked for Councilmember Marian Tasco, and working with Councilmember Tasco when I was in the law department, we had the opportunity to draft one of the nation's first anti-predatory lending bills that became a model for other cities around the country. Fortunately, that legislation was preempted at the state level, but as I moved into City Council in 2016, some of the advocates here in the city of Philadelphia that were looking at this idea of public banking brought me back to those conversations regarding predatory lending and my own background as a small business lender from Marian Bank. And so initially we had hearings on the whole idea of what is a public bank. I learned about the Bank of North Dakota, which coming out of a very challenging financial time in our country, started a state public bank that really became a banker's bank. And many of the people who live in the state of North Dakota that have student loans, the Bank of North Dakota helped to provide the lending for those who were getting educational loans in that state. So we then took on the next step of trying to get a sense of, would it be feasible to have a public bank here in the city of Philadelphia? So we engaged a firm, a national consulting firm, HRNA, to do a study regarding the feasibility of public banking in the city of Philadelphia. So we worked on that project with them for a period of time. And then we went into the beginning of the pandemic that we're all still dealing with. And we've all learned letters like Zoom and Skype and how we can navigate and turn on your video camera and turn off your microphone and put things in the chat feature. But as we came out of the first year of the pandemic, we were able to look at that study and see that, in the city of Philadelphia, which, as we all know, is part of the Commonwealth of Pennsylvania, there would be some challenges in trying to create a municipal public bank. So from that study, we then looked at our city budget process, and we were able to identify resources to hire outside counsel. I do see Len Bernstein from Holland & Knight, who helped us with the public banking legislation. And we spent close to almost a year just drafting that legislation and working along with the law department in the city of Philadelphia and also a city treasurer's office. In addition, the Philadelphia Public Bank Coalition held town hall meetings, and we brought various speakers from around the country to talk about public bank initiatives in their jurisdictions, from Shaman Walton, who was the chair of the Board of Supervisors in San Francisco, to other entities in the city of Philadelphia that were creating new organizations, like Greg Heller, who started the Accelerator Fund when he was at working with the Philadelphia Housing Development Corporation, or Emily Shapira and Mary Rose Matias from the Philadelphia Energy Authority, who created Philadelphia Green Capital Corporation, as well as talking with community development financial institutions from around the region. So we brought together all of those conversations and drafting the legislation. And we decided, based on the work with Holland & Knight and the City Law Department, the City Treasurer's Office, as well as conversations with a number of other entities like the Pennsylvania Department of Banking and Securities, the U.S. Treasury, the Federal Reserve. We thought the best model was to create a municipal authority in the city of Philadelphia that would provide products to underserved organizations and businesses in the city of Philadelphia. And that goes back to my experience as a small business lender. Many of our Black and brown businesses have some real challenges in having the collateral to start and grow their businesses. 6% of the businesses with employees are owned by African Americans in the city of Philadelphia. Only 4% of the businesses with employees are owned by individuals from the Latin diaspora. So there's been a real challenge in growing entrepreneurs in the city of Philadelphia to be able to provide more jobs in our city. In addition, other organizations like cooperatives are hard to lend to. So we thought the first step was, let's create a Philadelphia Public Financial Authority that could have the opportunities to provide letters of credit and credit enhancement to those hard to lend to entities, which is something that I saw back in my experience as a small business lender at Marian Bank. In addition, in talking with contacts with the U.S. Treasury and the CDFI fund, want to make sure that this new authority would have the ability to also be a community development financial institution and also provide support to the existing CDFIs in the city of Philadelphia. So based on all of that research, that was the legislation that was introduced in City Council and was passed to create a Philadelphia Public Financial Authority. Under that legislation, and what's required under state law, the mayor has to appoint a corporate board And that corporate board has various backgrounds in economic development, addressing some of the issues that we've seen historically in our city. And then the corporate board would appoint a policy board. And the policy board is a separate board that would do some of the lending and oversight of the letters of credit and other credit enhancement products. And that policy board would also hire an executive director. And we create these two kind of different boards because under state law, the mayor has to make appointments to a municipal authority organization, but also under the U.S. Treasury and the Community Development Financial Institution guidelines, the city could not have supervision and control of a CDFI. So that's why we have these two interlocking boards, but also we spent a lot of time talking with the city's ethics board. And I've spent quite a bit of time working on legislation with the ethics board. I actually currently have a number of bills that I've introduced to create a civics legislative agenda here in the city of Philadelphia, and worked on some of the original legislation to make our current ethics board independent. So in the legislation, we also made sure that the ethics board would have oversight of the corporate board, the policy board, and the staff of the Philadelphia Public Financial Authority. And so that legislation was passed this year. We're in the process now of talking with the administration about the appointment process for members of the corporate board and then the subsequent policy board. Also, as we're going through the budget process, we're looking for funding for this new Philadelphia Public Financial Authority, as well as the initial capitalization to do and provide those products like the letters of credit and credit enhancements I talked about. And we based the budget for this new entity based on those two new existing organizations I talked about earlier, the Philadelphia Green Capital Corporation, which is an affiliate of the Philadelphia Energy Authority, and the Accelerator Fund, which is an affiliate of the Philadelphia Housing Development Corporation. So we use those two organizations as models for the creation of the budget for the Philadelphia Public Financial Authority, and also looking at a lot of the other organizations around the country who are providing similar type of products that we're trying to envision for this new entity. Once this entity is up and running, the goal then is to create a subsequent or affiliate entity, which would be the public bank. And this entity would be an entity that would hold on to municipal deposits. Based on our initial research that we did with HRNA and all the legal research that we did, we wanted this entity to not be a retail bank, would not be a branch, would not be bringing customers from individuals or from commercial businesses, but an entity to hold municipal deposits to address some of the other issues and concerns. And through some of the research that we have seen, that the Philadelphia Public Financial Authority can be a federal holding company for the Philadelphia Public Bank that we hope to create in the future. So I know I gave a lot of information, but I wanted to kind of give a historical perspective of how we got from the initial idea for this whole concept of a public bank to where we are now. And we have a longer road to complete. And this has been an initiative that I've had a chance to work on with a number of people that have really provided a great team approach to this idea and this concept. And I'll just close with this and we'll open it up for questions. Part of the reason why I thought this idea would be a new and novel idea is that we need to have new ideas for our city and visionary ideas to do things creatively and differently. From my experience as a small business lender going back to the early 90s, we still have had the challenges of growing businesses in our city. And when you see the fact that only a small percentage of businesses, especially from the Black and brown communities, have employees, that directly ties into the 25% poverty rate that we have in our city. If we're not able to grow larger and more successful Black and brown businesses like other cities around the country, we're going to continue to have the high poverty rate that we have in the city of Philadelphia. And when you have a high poverty rate like we currently have and what we've had for some time, that directly ties into the public safety issues and concerns we have in the city. Because I believe, and I think it's been shown, the best creator of a job is a small business. And when we have more small businesses and more jobs that are successful, that directly helps to address public safety issues because people have more resources to invest in a home, to buy a home, provide opportunity for education, and also help to improve the quality of life of our city. So wanted to close there and I know there was some comments that were put in the chat feature, so I'd like to open it up for conversations and have a more detailed dialogue.
Thank you so much. So before we get into more substantive discussions, could you kind of tell us, because when you mentioned the question of a bank, people have a fixed idea of what the bank is. So can you tell us what the public bank will not?
Pedro, I think you are on mute because we can't hear you.
Can you hear me now? Okay.
I can hear you.
We can hear you.
We can hear you. Oh, but Derek can't hear you.
Yeah, Pedro, I don't.
Maybe Derek has a
I can't
speaker
hear
off.
you. I'm not sure if others can hear you.
See. Can you hear?
You hear the rest of us, Derek?
I can hear you now. I'm sorry.
Can you hear me now?
Gotcha.
Okay. So when people hear the word public bank, they have some fixed idea of what that is. Could you tell us, before we go into more discussion, what the public bank will not be?
Well, the public bank will not be. Well, the public bank, as we're envisioning right now, will not be an entity where you go into a branch and you as an individual make a deposit, or you as a business owner go into a branch and make a deposit. From our research, having a entity that has significant staffing in branches is a very expensive operation. And so in order to best address the issues that we're trying to deal with, that type of overhead, from our thinking, from a lot of people working on this conversation, would take a lot of resources and would take away from the issues that we're really trying to address going forward.
Linda has a question on the chat that say that you mentioned that other cities have more Black and brown businesses than Philadelphia does. Is there something different about our banks here in the city that has prevented Black and brown businesses from obtaining loans?
Well, I think, so when I think of other cities that have been more successful in having more successful Black and brown businesses, I think of Atlanta, and I think of the late Mayor Maynard Jackson. Now, from a legal perspective, laws have changed, but when Maynard Jackson came in as mayor of Atlanta at a very young age, he really presented a paradigm shift as the first African-American mayor of that city, and said that we're going to spend resources with Black and brown businesses. That was before some of the cases like Adirad and Croson that got rid of quotas from an affirmative action perspective. But he said we're going to spend city resources to help grow businesses. So we look at companies like H.J. Russell, which is one of the larger construction companies, African-American construction companies in the nation. They were able to grow based on the public work projects they received in Atlanta, and then were able to go into the private sector. And when you see the fact that when Maynard Jackson came back as mayor in '96, and Atlanta had the Olympic Games in Atlanta, by then Russell Construction had grown significantly and was able to participate and compete against majority firms. So I think when I think of other cities that have done a better job, it's because they had the leadership in those cities, especially at a time when the laws were different, and those businesses were able to get to a size where they could go to banks in a different way and get access to credit in ways that some of the businesses here in the city of Philadelphia have not been able to do. So I think it comes back to leadership and really using the city resources and assets as a way to help grow businesses in those cities. And I think this initiative is one way of doing that and using our resources to help grow, especially Black and brown businesses in the city of Philadelphia.
We have a question from Linda Orfanelli, and I think you alluded to this in your presentation. Her question is, how much capital will be needed to fund this initiative, and what are the sources of the funds?
So the initial capital for the operating, well, I'll give you two buckets. So we're looking at $3 million as initial funds, and we're looking at that to come out of the general fund. for the operating costs of the first couple of years of the Philadelphia Public Finance Authority. That's comparable to the initial budgets for both the Accelerated Fund and the Philadelphia Green Capital Corporation, which are also both new entities I talked about. From a capitalization in order to provide loans, we're looking at $75 million. We're looking for that to come through the public offering process here in the city of Philadelphia. As you may know, the city did receive $1.4 billion through the American Rescue Plan, $700 million last year, $700 million this year. Some of those dollars were used to address the deficit that we would have had last year, $450 million. But there's also opportunities to use those dollars creatively going forward. But we're looking at doing some type of offering, working with the administration for that initial source of $75 million for the funding for the Philadelphia Public Financial Authority. And when you think about other public offerings and initiatives, just yesterday we had a press conference regarding the Neighbor Preservation Initiative, which was an initiative that was started by Council President Clark, a $400 million initiative that I think the debt service per year is about $20 million. So for a $75 million initiative, we're talking a much smaller debt service, more in the range of about $2.5 to $3 million per year, which I think is a small investment if we can grow businesses in the city of Philadelphia to help us reduce our poverty rate.
Bill has his hand raised. Bill, go ahead, ask your question.
Thank you. I'm sorry, my video is not working. My question, when I talk to people about this, they would say, well, what assurance do we have that the loans are going to be safe, and are we going to be plowing public money down the rat hole? And is it, for one question, will it be regulated by Controller of the Currency, State Department of Banking, anybody?
Well, thanks, Bill, for that. Those questions. Now, for the Philadelphia Public Finance Authority, we have to be in compliance with state law, Pennsylvania Department of Banking and Securities, and also following under Economic Development Finance law. For the capitalization of the $75 million, we are being very conservative in reference to delinquencies and make sure we have a sufficient reserve. Looking at the Bank of North Dakota and other financial institutions, we are actually anticipating just being much more conservative in reference to our delinquency rates. But at the same point, the goal of this initiative is to really provide that type of collateral for existing businesses that have not been able to grow their business, especially when we have opportunities like the Federal Investment, Infrastructure, and Jobs Act. And so we are hopeful, and by taking the steps that we're taking to making sure that the underwriting criteria for this institution is safe and sufficient, and using people that have that type of lending background like myself to try to mitigate those type of risks with this new entity.
Yeah,
go ahead, Bill.
I think the problem is that somebody's going to set up the board, presumably like the mayor and city council. And what assurance do we have that I know that if you were running it, it would be a careful and thoughtful and not entirely politically motivated process. But some people remember, for instance, the Girard Trust in past years having not done a very good job of investing money. And so what kind of oversight will there be over whatever board that the politicians pick?
Well, and that's part of the reason that under the Economic Development Finance law, it does require the mayor to appoint the corporate board, but under the CDFI fund, under the U.S. Treasury, you cannot have supervision and control by the public sector. So that's why we have these two interlocking boards. The corporate board will be appointed by the mayor. That board would appoint the policy board, and the policy board is going to be the entity that's going to be responsible, along with the staff, which is also hired by the policy board, to do the underwriting criteria and also the decisions in reference to letters of credit and other type of financial products. So we want to have that kind of one-step removal from the appointment from the administration. In addition, we specifically included in the legislation to authorize the ethics board to have oversight of the corporate board and the policy board and the staff. So we actually had to go to the ethics board. We actually had to amend the legislation to give them the authority, because traditionally they would not have authority over this type of entity. But we specifically put in the legislation to give the ethics board authority over the corporate board, the policy board, and the staff to make sure we don't have those type of improprieties that you're talking about. So that's why we did kind of a 3-layer perspective: a corporate board, policy board, and also the ethics board to provide that type of oversight, as well as the fact that this is an entity under the state economic development finance law. And we're continuing our conversations with the Pennsylvania Department of Banking and Securities regarding this new entity as well.
Andy, do you have your hand raised, or?
Yeah, it's in the field there. You can hardly see it.
Okay.
Well, first of all, congratulations on and great work. I know it took years actually to get to this point. Anything dealing with finances is going to be a lot of hoops to jump through. So congrats on that. And still so a little ways to go, but I am a supporter, as you can probably tell. I think the corollary to this is kind of what happened out of the empowerment zone. And hopefully you can get some funding from the federal government to really capitalize this, which was what happened with Finanta, what became Community Capital now. I think it's Community Capital, that Finanta became a lender, and also the West Philadelphia Financial Partnership, financial partnership. So there are existing examples of good organizations that make smart loans. And, maybe you can respond to the one question that came up from a critique that, oh, there's too many lenders out there already, CDFIs, which I don't believe, but and I think there's always a need for more capital and risk sharing across different organizations. But that was one of the critiques that came up recently, is like, oh, well, why do we need another lender? Because we have a bunch of CDFIs out there.
Yeah, and that's actually a really great point to give some more context. As we've been putting together this whole idea, I have been trying to be a really open book. I've actually sought out and had conversations with the Pennsylvania Bankers Association, the Cross-State Credit Union Association, Community Bankers Association, because a number of those institutions had concerns that, well, you're going to create a city entity or municipal entity that will be able to do interest rates at a lower rate that's going to directly compete with those institutions. My response to that is that the products we're trying to do are things that traditional banks, community development financial institutions, credit unions, they don't do. And I was a banker. Banks, receive your deposits, they pay you out an interest rate, then they lend out that money at a higher rate of interest. Now, banks don't traditionally do letters of credit or credit enhancements. Now there are letters of credit in more of an export-import perspective, but for the most of the traditional financial institutions, they receive deposits and lend out money, and that's their business model. The goal of this entity is to provide a credit enhancement, or a basically kind of a collateralization to really help those businesses and hard to lend to entity to become more bankable. So in anything, we're actually working more in partnership with traditional banks and community development financial institutions, and even CDFIs themselves. There are situations, and you talked about West Philadelphia Financial Partnership, who's now known as Vested In, talked about Finanta. Those organizations also receive dollars from multiple entities and only can lend up to a certain amount. Well, one of the CDFI said, listen, we want to borrow more money. I see the Philadelphia Public Financial Authority as an entity that can provide a letter of credit or credit enhancement even to a CDFI, so that they can get access to even more dollars and do more lending, direct lending as a loan. So I don't see us competing in that space, because we're not doing the same type of lending. We're providing letters of credit and credit enhancements which is going to focus on the collateral side of helping those hard to lend to entities become more bankable and become a better type of credit opportunity for traditional CDFIs and credit unions and banks. So really, I see this as more of a partnership, not a competition, because we're in a space and trying to stay in that space that those traditional financial institutions are not in. And this is not the type of products they provide because they traditionally are doing your traditional loans or lines of credits and receiving deposits and lending back out, which is not the model of this institution.
So let me, I have a question, and then let me kind of frame it. And I'm going to talk about three different things. I served on the board of the reinvestment fund for 10 years. And Jeremy Noward, one time we were having some beers one time, he said, we're doing something wrong because we haven't had a loss yet. And that was many years into the organization. They were just being too careful on who to lend money to, not taking risk. I devoted a great part of my time and then graying on my hair on the creation of the three financial institutions of the empowerment zone. I mean, two out of the three survived, which is a good track record. But over the years, some of them tend to become just like regular banks in terms of what they require from potential borrowers, special entrepreneurs. Right now, I know because I have spent a considerable amount of time on the streets in North Philly and in Kensington and lower Northeast. There are businesses that they're carrying loans about 25, 35, and 40% interest rate because they're not bankable because the obstacles are just too enormous for that. And so what policies are going to be put in step so this financial institution would be flexible enough to understand the particularly very non-traditional ways in which a lot of our entrepreneurs operate in that will allow them to be bankable in that sense so they can grow, so they can start employing other people rather than their own families.
No, Pedro, that's a really excellent example of why I think this entity is so needed. So the businesses that you're talking about, for those type of businesses, are probably individuals that have a great track record experience of providing a service, and then decided I'm going to start a business that provides that service. And so they may have not had a lot of resources to collateralize the business. They just started running the business and got up and running either because they worked for someone else and they had a group of clients or they had a product and just was able to make it work through hook or crook. And so now they're starting to grow. They have some employees, but when they want to get additional lending to grow that business, if they go to a traditional bank will say, well, you have to meet a certain collateral, you have to have a certain FICO score, and you don't meet that, or you may have not had a deposit relationship with us for X period of time. So then they may go to one of our other CDFIs, and unfortunately for some of the CDFIs, and your example talks on this, have a limited amount of resources because they're not the Wells Fargo's or the Santander's. So in some senses, some of our smaller entities are even more challenging to lend to businesses like you talked about. They have to be a little more conservative in their underwriting criteria because they have limited assets. So it creates this kind of catch-22. I'm not able to go to some of the smaller CDFIs for lending, and I'm not able to go to traditional banks. So then they've got to get access to lending. And so what ends up happening is they go to these hard money lenders who charge a much higher percentage rate, as you stated, and they're not able to get out of the cycle and grow because they're using the money that's coming from the business to pay back on a loan that's much higher than peers who are in a similar type of business, but in another part of the city don't have to deal with that same issue because that peer may have a friend or a family member who would be a co-signer or say, listen, you can use this as some type of collateral to help you grow your business. And so that peer now has access to much cheaper credit versus some of the business that you talked about does not, and they have to pay a much higher amount of interest rate in order to pay back that loan, and are never able to get beyond that cycle, which I think goes to that issue of why you have 6% and 4% of Black and brown businesses in a dynamic of not having a lot of employees. So the goal of this entity is to say, listen, we're going to break even. We're not looking at trying to make significant profit, which is what a for-profit entity is trying to do. Even some of our nonprofits have to bring in some more resources than their expenses because they are a nonprofit. This is an entity being created by the public sector. So the goal to me is to break even, to be a little more flexible, to provide that type of letter of credit. So for the businesses that you're talking about, won't have to go to those hard money lenders at 25, 30%. Now they have that, the city through this entity provided them with some collateral, just like their competitor business in another part of the city has from friends and family. And now they can go to the more traditional banks because they have a better collateral perspective, and it reduces their risk profile to make it easier for them to get access to credit. And I think that's one of the historical issues we've seen in our city and in cities around the country, that those businesses that you talked about, businesses from Black and brown communities, immigrant communities, are never able to get over that hump, because when they want to grow, they have to go to the lenders that charge them a lot of money, and they can't get to that next level and next stage of growth of business. And it creates this cycle of the same type of businesses at the same level over and over again, which to me ties into the poverty issues we have in our city, which then also impacts some of the public safety issues because people don't have access to jobs because the small businesses are not able to grow to provide that jobs to address those issues.
Interesting. There's a question here by Andy. Andy, you want to say the question, or want me to read it? Small business borrowing is really hard to do. And he's kind of following up on your response to that. So having a backstop or a letters of credit will allow some additional risk, but still with due diligence at a decent terms. So can you, I guess you have not flushed out everything, but how much education would be available for the small business entrepreneur community on how to access the services? What part of the operation will do that?
So one of the other things that I'm looking to do through this entity is that there's a lot of programs that I've seen in the public sector that are great programs, but for many small business owners, they don't know about those programs. They may not know about this initiative coming from the Commerce Department, or if you're in West Philadelphia, you've got Vested In, or you've got Finanta, or you have the Enterprise Center. And there's a lot of great initiatives and programs and funding opportunities, but for many small business owners, she or he are probably the most proficient person in their business to run that business and provide that good or service. So they may not be able to just jump on a Zoom or go to MSB or go to some type of program to learn about an opportunity, because they've got to be in their store, in their business, providing that good or service. And so a lot of the initiatives are not taken advantage of by these entities. So one of the other things I would like to see come out of the Philadelphia Public Finance Authority is to help get information about a lot of different CDFIs and other organizations and programs that the city have, and get that information to small business owners, directly to them, to give them an opportunity to take advantage of that. And I think that's something that has been challenging historically. When I think about programs in the city of Philadelphia, and I go back to my experience as a deputy city solicitor for the city's Office of Housing and Community Development, for the most part, the city will provide money for the program, but not the marketing of the program. So we have all these great initiatives, but people don't know about it because we don't have the ability to get the word out, because we're spending money on actually the program and service delivery. Whereas in the private sector, we know when you see a stagecoach, you think in Wells Fargo. If you think of Phillies, you're thinking about Citizens Bank because they have resources to invest in marketing to get the word out so that when anytime you're thinking about certain type of services, you're thinking about those entities because they're constantly marketing and getting information out. That's been a challenge historically from the public sector, not having the ability to get information about a lot of different lenders and programs and organizations that we have. And so going back to my point about partnering with CDFIs, I'd like to see this financial authority have that ability. So if you're in like the Northeast, you may not know that the Enterprise Center is one of the best incubators for food businesses, or the work that Fanata is doing or Invested is doing. So having ability of the Philadelphia Public Financial Authority to get information out regarding a lot of the programs and lending opportunities and services that these organizations are providing is something that takes something off their plate, but gets it out to those entrepreneurs who really can need and take advantage of that. And we saw during the pandemic how so many businesses, especially in Black and brown businesses, were really impacted by this pandemic, because it was not only a global health crisis, but it was an economic calamity for so many businesses who unfortunately had to close, even though there were initiatives like PPP loans and some of the work that we did through the Pennsylvania CDFI network and some of the funding opportunities that came through the city. Many didn't hear about until after the application process was closed, even though we try to get information out as much as possible. So those are some of the things I think we need to continue to do and continue to partner on going forward.
So Robert has a question in the chat that says that what you have described is a public bank primarily oriented to help smaller businesses grow. In addition, are there other financial activities that are planned which are oriented to provide services to the city government itself or to residents of Philadelphia?
So, financial literacy, as I just talked about, I think is one of the areas that we need to provide, especially for business owners. So that's something I see as a direct benefit to residents in the city of Philadelphia. As you see other public bank initiatives around the country, some are focused in broader ways that we're looking at. As the Philadelphia Public Financial Authority gets up and running, and then we are able to create the public bank, there's ideas that some have had, and we'll have to go through those steps in reference to financing city debt through a public bank using the city deposits, if that's a means. And I know that's part of some of the conversations that people have had specifically in Philadelphia as talking about this whole public bank initiative and the other cities around the country. So we'll continue to explore that. I think the first step was, let's focus on this area where there's a real critical need, which is the Black and brown businesses, hard to lend to entities like cooperatives or affordable housing developers. And then as we get into the next phase, could there be opportunities to do other type of financing that could benefit the city of Philadelphia and some of the other city-related entities?
And I think Bill posted another questions in terms of getting the information out, whether it's going to be using all of the city mechanisms that communicate with the public to get the message out for that, like, inserts in the gas bills and stuff like that.
Yeah, and we, I know through the law department, when I did represent the Office of Housing and Community Development, we often put information regarding base system repair program. I chair the gas commission, as I said earlier, we put information on the gas bills. But as we know from marketing, you have to touch people a lot of different ways. I'm using technology like phones. That's another idea that we could be using to get information out, that some of our smaller community development finance institutions just don't have that infrastructure to do that. So using this entity as a way to help those other entities to grow, I think helps to provide that partnership and helps to strengthen the financial ecosystem of our city and region.
I just had Linda, do you have an additional question to the one about the funding mechanisms to get the public finance institution started?
I think that was Linda. It was Linda Orfanelli.
Yeah, Linda Orfanelli. Yeah. Or that was you that had a question, Tom?
Well, no, I had another question, but Linda, you want to ask yours?
I think that the council person answered most of that question. That was early on.
Right.
Okay, well, yeah, well, my question was, actually have twofold question. So, Councilmember, you talked about that you think there's space in the market for these services that others are not providing at this gap, and that may be true sort of at the retail end of it, but on the back end, wouldn't this authority actually be competitive with the CDFIs in looking for the sources of investment into the authority? The CDFIs take money in from the big banks. And that seems to be where you would be looking also for investment from those big banks into the authority. So you are competing, or would be competing with the CDFIs. Do I understand that correctly?
Yeah. I mean, I also have heard that perspective. I know I've had some conversations with various social impact investors and others that traditionally have not invested in CDFIs. So we wanted to make this entity a CDFI to give us as much broad range as possible, but at the same point, look at other type of funding opportunities. Ideas of working with labor who has pension funds and other type of institutions that may want to invest in this type of entity, and that's doing something different than some of the traditional CDFIs or some of the private entities are doing. And so I do understand that concern. That's why we're trying to find ways to partner with CDFIs and continue to help them grow what they're doing, but do things in a different way and go after investors and other type of funders that may have not traditionally gone to CDFIs because we're providing a different type of product.
And if I can ask you, that clarifies that. But I do have another question. It's on a slightly different angle, and that is that how will you measure that this is a success down the road? If you're looking at just the rates of Black and brown business ownership, one of the things that the research that we've done and others have done is that one of the problems that holds back a lot of Black and brown businesses is not that they don't want to get into these, they don't want to grow. They're in the sectors that don't grow. They're in home health care or retail food establishments or they're small businesses that they certainly do provide jobs at the small level, but they don't grow. They are actually not, and all the data shows they don't have revenues. There's no way they can generate the revenues to create the wealthy companies and the assets that we're talking about that we want the city to have. They're just in the wrong business. And how do you move them, and how can this authority have an influence on those communities getting into growth businesses and into sectors? And it seems to me that's an educational system question as much as a financing question.
Well, I mean, that's an interesting perspective. And one other follow-up point to your first point about competition, because this is kind of the first in the nation. So we're also having conversations with investment opportunities beyond Philadelphia who may not be known or have relations with local CDFIs. So I see it as another investment opportunity. But in reference to your comment about the type of businesses that are currently being created, that is a concern, but also even in some of those small revenue areas, you have businesses that have been very successful because they've been able to franchise and grow to other jurisdictions and other cities. So there is, we have a growing immigrant population in the city of Philadelphia. If you look at what's happening in Southwest Philadelphia in reference to the African diaspora, the work that Akana has done, for example, M&T Bank actually opened up a branch in Southwest Philadelphia, and they've had a significant growth in deposits from some of the same kind of smaller businesses that you would not think would have high profit margins, but they saw an opportunity because there was not a retail branch in that location. So I think there are some of the things you raise are definitely concerns, and you have more established businesses that are not able to grow, that are in more high growth areas, but because of some of the other things that we talked about, like lack of collateral and undercapitalization, that they're at a certain level, like say 10, 15, 20, 30 employees, but can't get to 50 or 100 employees like some of their competitors. So it's not just for newer businesses. We're talking also more established businesses that have an existing line of credit. I mean, I had a conversation with a friend of mine early part of this year who has a technology company, received a contract from the city of Philadelphia. The city had been serving that contract since October. He had not been paid any of the invoices on that contract. He had a 25-year relationship with a traditional lender. He went to that traditional lender and said, listen, I need to increase my line of credit. Was not able to get that line increased. And his individual account executive from that bank said, no, I'm concerned that if some other people within the institution see that what your scoring was, your existing line may get pulled back. So this is a business that was actually a growing business in the technology space, had a city contract, has a private sector contract, but because of the cash flow issue, we're really going to have to go to those hard money lenders that Pedro just talked about. And this is a company that's in the technology space that's been growing. So it's not just smaller businesses that may be on a commercial corridor in a neighborhood in the city of Philadelphia, but it's also more established businesses that may be in Center City and in an office building that are also having some of the same challenges that, but for this type of opportunity product, now luckily we were able to get that contract resolved with that city department, but they could have been in a situation getting that hard money loan and not be able to really take advantage of the opportunities like the Infrastructure Investment Jobs Act that was passed in Congress that's going to provide $1.7 trillion in capital investments. And they would not be able to take advantage of that because they would be tied up in a hard money loan at a much higher rate of interest than they should have been in.
Interesting. So I would not be remiss if I don't bring this question up. This administration is ending near the end of its term, and then we're going to have a new round of mayoral elections coming up. What is your opinion in terms of what direction the city of Philadelphia needs to go in both in the near and long-term future, and what type of leadership will require to do that?
So I am a very strong Philadelphia sports team fan. Yesterday was a very big day in sports for Philadelphia, both for the NFL draft and the Sixers playoff hopes. So I will couch my comment from a Sixers basketball perspective. I think for our city, we need to have a leader in the city of Philadelphia that reminds me of someone that came from another Commonwealth, the Commonwealth of Virginia, which is a Commonwealth I love quite a bit because I went to UVA undergrad, to the Commonwealth of Pennsylvania. So when Allen Iverson came to Philadelphia initially, there were a number of people from Northeast Philadelphia to West Philadelphia. Some, like my dad would say, are more seasoned than I. So had some real concerns about the long shorts, tattoos, hairstyle. But as he played for the Sixers, he played with the mentality and the perspective that I think embodies the city of Philadelphia. That no matter what the problem or the challenge, no matter how the fact, remember Iverson was listed 6'1", but really probably about 5'10", 5'11", about 180 pounds. But I think he embodied the city of Philadelphia. That no matter what the challenge, the concern, you knock him down, he's going to get back up. And remember when the Sixers went to the NBA Finals against the Lakers, many people felt, well, how the Sixers are going to beat the Lakers? They've got Shaquille O'Neal. They've got Kobe Bryant. There's no way the Sixers could win. And if you remember, the Sixers won game 1 in LA because I think Allen Iverson said, I don't care what the problem or issue or challenge, you knock me down, I'm going to get back up. And the city of Philadelphia, we've had some big challenges. And when you think about the fact that we had 562 homicides last year, the fact that we've had significant issues of homelessness and opioid addiction and other challenges in our city. And so I think that we need a leader for the city that's going to be like Allen Iverson. And the fact that you may knock us down and we have a big issue like public safety, and we'll say that's Shaquille O'Neal, or an issue like homelessness, and we'll say that's Kobe Bryant. You're going to knock us down as a city, but we're going to get back up. And I think that's the mentality that Allen Iverson exhibited as a player for the city of Philadelphia. And by the time he retired, all people of all backgrounds, all loved Allen Iverson because they knew that every single day, every single game, he was going to fight to the death to represent the Sixers. And I think no matter what the challenges that we have in the city, the leadership for our city should have that same type of perspective and Allen Iverson mentality that no matter what the challenge is, public safety, gun violence, homicides, opioid addiction, homelessness, economic development, that person's going to fight every day for the city, like AI did. And I think that's the type of mentality that we need going forward because we've had issues in the past. We even had a pandemic in Philadelphia before. We've had gun violence in the early 90s that rivals some of the gun violence we've had now. We had a city on the verge of bankruptcy in the early 90s, but we got through those situations and we got through it working together as a city collectively. So I think it's having that type of AI mentality, no matter what the challenge, that reminding people that we are the best city in this nation. We're the birthplace of this nation right here in Philadelphia. I think sometimes we forget that. We forget where we've come from, the history we provided as a city, and the opportunities we have going forward into the future.
Thank you. I know that you have been raising a lot of money from small donors for your Green Fund. There's a lot of people, a lot of members of City Council are considering running for mayor, which might create some interesting dynamics in terms of the vacancies that will happen before the end of the current terms for some of the current members of City Council. Do you see that as a problem for the city in the last years of this current cycle?
Well, I think there are a number of different elected officials and citizens who are thinking about the future of the city of Philadelphia. Many of us have relationships with a lot of different people. And I think at the end of the day, people have to make a decision on who they think will do the best job to lead the city of Philadelphia going forward. And I think I've always taken the perspective that I have relationships with people that hopefully will survive elections. We have 2 elections every year in May and November, and we'll continue to maintain a relationship that I've developed with people. And I hope that people, when they make a decision on who they think is going to do the best job for the city of Philadelphia going forward, that's based on their own personal experience and perspective and true belief who's going to lead us going forward. And we have gone through other transitions in this city where people have left public service and ran for office, and some were successful and not successful. And that's going to continue to be the dynamic going forward. So I think that as we go into the end of this year and go into next year, there'll be opportunities for leadership for our city. And I'm just hopeful that people think about who are the individuals that will do the best job to lead our city going forward. And from my perspective, when people make that decision, however they make that decision, I'm hopeful that they'll make a decision that makes the most sense for them and for our city. And whatever that outcome and decision will be, I'm fine with that based on those relationships I've had in the years past and hopefully in the years future.
Well, thank you very much, Councilmember Derek Green. And on behalf of Philadelphia Committee on City Policy, we've really enjoyed this conversation, and we thank you for that, and we thank you for the service to these residents of the city. This presentation has been recorded, so it'll be available on our website for people to share with their those who were not able to be here with us today. For our next session.
Pedro, can I just add one quick note?
Yeah, go ahead.
We didn't get to it today, but I thank you for all of your ethics work. You know, we have somebody that's been indicted and going to jail probably, and you know, we've had a rash of that over the years. But I think there is a need for some reforms. There is a need for reform at City Council and our government. So thank you for that, and also for the redistricting work. I think that's really exciting too. So well, I know we didn't get into that. I'm sorry we didn't.
I will put my email in the chat feature. I definitely appreciate the opportunity to have the conversation. Look forward to having ongoing conversations. And just real briefly on my civics legislative agenda, That's really based on the concern that we've had 22% participation in our last general election. And when I look at the work I've done as president of Democratic Municipal Officials or on executive committee of National League of Cities, I've looked to see what are other cities doing on some of these ideas. So Pittsburgh and Erica Strasburger is a council member in Pittsburgh, so we kind of pulled some of those ideas and some of the other things I've worked on, even from the public safety issue of looking at the residency issue that's impacting public safety and police and hiring bonuses. That was ideas I've seen in other cities, and I try to use my experiences to bring back ideas and suggestions to kind of move our city forward. So thank you.
Well, thank you very much. Our next event, please just stay tuned for details on that in the month of May. And everyone have a great weekend. And again, thank you so much, Councilmember Derek Green.
Thank you. Take care.
Take
Be
care,
well,
everybody.
All right.
Thank you.